Hi guys, how are you? Vladimir here. This is the Monday session. Instead of live trading room, we do it with a video recording. Sorry for that. Just as I said on the email, I got sick, got some virus. Not sure what's going on. Sorry for my voice. You probably can hear it's not on its best. So I'm recording this video for you. This is our weekly trading plan, which we create on Monday and we follow during the week. On the other sessions we do the follow-up and the updates and upgrades. So this is a trading report for all those of you who are new to the club. Welcome to our family. Two main things you have to do. First is to watch the video tour that you can find in the members area, and then inside this trading report, which you get together with the live trading room. Okay, after every live trading room session, you get a trading report. You have here the video how to read this report. In the comments, the most important webinars you have to watch in order to understand what we are doing and how we are trading. Everything is here for you. Just click on that. It directs you to the video directly in the members area. If you scroll low, you have the watch list. This is our full list of the instruments we are watching to trade. You just click on that, it opens for you the image which explains how we are looking to trade it, what we expect of the chart. So a type of the cycle and what we are looking to do, systems that are suitable to trade. A bit below the comments, you have it separated by sections. The Forex market, each paired, the directions we have, bearish, bullish, neutral, or both, if it's one for short term, one for long term. Here you have the short term trading ideas, indices, commodities, CFDs, and of course the cryptocurrencies. So that's the trading report. Now I will go over the report and we will cover the whole list, okay, one after one. Trading plan for the entire week. So let's begin. This is Monday session, so it takes some time. So that's all. Let's begin. The euro dollar. So the euro dollar, we were bearish on this pair. The pair reached beautifully the correction area. This is a clearance zone. Clearance zone means clear the last important low. Bullish hidden divergence here on the weekly chart. And the daily cycle, as we expected to see, created for us this special cycle. So this is like number 1, number 2, number 3. 1, 3 pretty much equal to is at least twice longer the size of each of the other ones. We got a false break right here around the psychological level of the 115 and a beautiful bullish divergence, which makes the euro dollar to be at least on the short term bullish. So what we expect from this area, as long as this low holds, we would expect two waves retrace and then very likely continuation, or at least some kind of range movement for a while before it can continue and create the lows. Meanwhile, on the short term, the euro dollar would become bullish, and this is as long as we are above the invalidation area, so pullbacks and we can look to buy. Everything is valid on the short term as long as we are above this area. The next pair on the list is the euro versus the pound. We are bearish here for the long term due to the triple cycle from the weekly false break and the bearish divergence. We are looking for rallies to sell. Now we go to the daily chart to find any kind of synchronization with the weekly cycle, and what we can figure out that we are still stuck in a range. This becomes like a very possible scenario due to the fact that the pair really had a hard time to break below this range. We have the channel here on the daily chart, so if we can get closer to this area, the sells would be very convincing. However, as long as this range does hold, we can also start to see some fake breakouts upside, and then we would be looking to enter with the trendline breakout, which would be created on the 4-hour chart. The current trendline is here. this trend line would not be valid here because we have no 2 candles rule in play. The last 2 candles of this trend line, if we mark that as 1 and this one as 2, right? So between the high here and the low here, the last 2 candles, the correction not broken. So not 2 candles rule not in play, not broken this low of the 2 candles. And that's what makes it invalid, right? So this is the last relevant trend line for us, and that's why I say it might do something like that, where we will be looking for sells. Bottom line fact, we are after sells. The higher this rally can take us to, the better the sell would be. Next one on the list is the euro versus the yen, and this pair basically is a pair where we don't have any kind of cycles. The weekly cycle that we've had before here reached its target. We dropped the 38.2 Fibonacci expansion on the cycle. We figure out that we hit the target, so this cannot be in play. We take a look on the next cycle, which was created by the daily. We got a double cycle, and the 38.2 of this cycle was also reached, so no cycle in play. Even the small one reached the retrace. So we don't really have the cycles in play here, so there is nothing we can do with the with this pair in terms of cycles. So the last idea in such situations is trade the divergences, which makes it more aggressive, but pure divergence without any money flow direction. So the last divergence on the weekly, which would be bullish. It is pretty much weak because this is exactly the time where the moving averages cross from positive to negative area, and that's where we have a histogram doing this divergence. It's pretty much weak, such divergences. That's why there is a good chance for continuation. The last daily chart divergence is bearish, and it is bearish hidden divergence right here. So this is basically what I will be looking to do, to combine the daily with the lower time frames, get some corrective cycles here, get some divergence here, and look for possibilities for sell. As long as we are below this high, which is the invalidation area, and this is the invalidation, because if we break that, that might simply change the direction. So the euro yen is, according to the cycles, totally acceptable to trade in both directions. In the short term only, because we have no cycles on the long term. However, the current pressure based on divergences is still bearish. The next pair on the list is the euro versus the Aussie. According to the weekly cycle, we have this range and triple cycle, which means we are after sells. According to the daily cycle, we have here bearish hidden divergence developing. If we drop to the 4-hour chart, we can figure out that this was the first leg, this is the second leg, this is number 1, and this is number 2. We are approaching to the very critical area. This area is the 100. So basically what we have currently is 1 and 2, right? So we must get this broken before we can discuss again about the sells. Currently we have some better trend line developing, which is here with this divergence developing, but it's still not in place. So will that hold or not? We should not try to guess. We should go with the fact. Facts would be that this pair would become again valid and correct for a bearish view when the trend line would be broken to the downside. As long as it's not, Euro Aussie short term holding its rallies. So we are after sales, but we're waiting for the right time to happen. We are after sales as long as this invalidation area holds. Currently the pair has no breakout here, and we do want to see the breakout happening. It's not there yet, therefore the short-term rallies are still in play. Once we break below the trend line, we can start looking to sell the rallies. Next pair on the list is the euro versus the kiwi, and the pair is approaching. Well, let's start from the beginning. According to the long-term cycle, we are after buys. That was a triple cycle here. 1, 2. We expect that to reach higher. That's from the higher time frame. From the lower time frame, we got here 1, 2, and which got all the way up there. Now it is in kind of a ranging cycle, ranging correction, right? So for us, buy drops, buy lows is a very good thing to do. This is a daily chart, which is so far, I was expecting it to make it slightly lower. We never got it there. Instead of that, we got the false break and a turnaround from the bottom of the range, and the pair still rallies. This is still the current trend. However, on the short-term view, we got this cycle breakage here. Now on the lower, it was kind of a cycle like that. Now making this final leg. So if we, well, let's drop to the 1 hour chart so it's visually better. This is what we were dealing with. Then a ranging correction, triple range correction, and the second leg developing. So in that case, for the short term, the euro versus the kiwi remains bullish. This is the first place where we can expect possible retrace closer to the area of 170, 171, slightly higher from there, which after, very likely once again, we would be after deep buys. So the plan is for the long term buys. For the short term, we can expect pullbacks from these areas. The best thing to identify and verify these pullbacks, because the daily is still, the weekly, is still bullish, it would be if we can get some false breaks on this area and turn around with the lower lows. That would be the best place to look for that. So this is for the euro versus the kiwi. Long term buy drops. The short term, we accept these drops from the area of 170.50 approximately up to 171. That's the place we would accept the drops. Euro versus the Canadian, according to the weekly cycle, the triple cycle here, we are after sells. So we should be looking on a daily chart for cycles for possible sells. This is the cycle that is creating on a daily view. This is our critical area where we would expect some sells. We drop to the 4 hour chart. We need to start watching for some false breaks here around this critical area, turnarounds, and then mark the trend line and look to sell the rallies. So the Euro CAD was and remains bearish for us. We are looking for the setups to go and to form. Euro versus the franc. This is our pair. Our view was and remains bearish. We are basically there in this kind of movement. We expect sell. So sell the rallies basically. On the short term, we can definitely see the pair trying to do something like that, but our plan does not change. Sell the rallies. Euro franc remains bearish for us. And that's all basically for the European pairs. You can see some of them are much clearer. Some of them sorry. Some of them are much more forced, I would say. The way I see that, euro dollar, euro pound soon, it's not there yet, completed. Euro CAD, very, very interesting ones. Euro Kiwi on the short term, very interesting one. And the rest are kind of less good looking. Euro franc also, but for longer term, so we need the setups with the daily and 4 hour chart combo. The next ones would be the pound pairs. The pound dollar basically got for us the divergence we wanted to see. Finally, it's in play. There is one problem with that divergence, and that is that it's not around any kind of cycle. Because if we take the legs of the weekly and we drop the cycle on it, we figure out that it should be around the 128 area, which never happened yet. And that makes the pound dollar to be a bit tricky as for now, because we do have here the triple cycle of the pound dollar movement, or a special cycle. Doesn't matter how we break that. So we do want to look for the buys, especially with the bullish hidden divergence that the pair formed, right? But we don't have the cycles on the daily chart to confirm that, and that's where the aggressiveness comes in play. Looking on a 4-hour chart, we got this false break. This is still from the daily chart. We never got any triple wave up here. We never got any high broken. So for the pound dollar, the long term still remains bearish. On the short term, we do accept pullbacks because we did have the 2 false breaks on the 1-hour chart with the bullish convergence that formed here. Okay, so if we do get pullbacks, we can still have some rallies, and these rallies very likely later on would be for sells. So short-term rallies are acceptable. Long-term is still without any clear retrace, could push it lower. Pound versus the franc, basically the same story. For the long term, this pair we are only after buys, and the reason for that starts from the very long term. We are talking about this double bottom with the divergence, so we are after massive buys for the long term. On the short term, the weekly chart provided us the triple cycle, which is 1, 2, 3, with the bearish divergence. So this would be our place to start looking for the long-term buys. Dropping to the daily chart to find a setup, we figure out that the pair is building here a special cycle. So we do want to see that dropping, ideally to below 130, more ideally closer to 129, 128, and we are after buy. So short-term pressure is still bearish. Once we get a turnaround, which means the false breaks and the higher highs, we can start looking for the retraces to the upside. So pound franc short term still remains bearish. Long term, we are looking for the turnaround and become bullish. Pound versus the yen, exactly like the euro versus the yen, is without cycles, because this cycle that we've had before reached its destination area right here between 38 to 50. So this cycle is not in play. The next cycle we got on this pair was the double cycle with the 61.8, and this one also reached the 38.2 of its retrace. And then we basically are without any kind of cycles. We got the double cycle from the daily chart, which is here, and this one also reached the 38.2 here. So no cycles are available. In that case, we do that exactly like with the euro yen, based on the last divergences. The last divergence on the weekly is bullish, and it comes from here. The problem with that is this is the place where the moving averages cross the MACD, so that makes it less reliable. The last divergence from the daily chart though is bearish hidden, which makes that, from my point of view, still bearish as long as we are below the invalidation area. So technically both directions are completely acceptable to trade because there is no cycle, not on a daily, not on the weekly, and that's as per cycles. But the divergences do push that down, and that's why the current pressure, current momentum for the pound versus the yen was and remain bearish. So sell the rallies is still the plan while we are below the invalidation area, which is right here, and there is a good chance for that to see new lows be reached. Next on the list, pound versus the Canadian, a pair that does not have any kind of cycles. The drop down cycle, this one, reached its target, the 50%. The rally in 2 cycles here, 1 correction, 2, reached its correction as well. So pound CAD doesn't have any kind of cycles in our help. So what we can trade here is also last divergence in play. Last divergence from weekly is bullish, hidden. Last divergence on daily is bearish, hidden, which makes it a classical scenario of both directions tradable on the short term. And the best thing to do in such cases would be to spot the places where the bearish divergence comes in play, and then the daily and the 4-hour chart have the combo. Enjoy the short-term drops, and at the moment where the 4-hour with the weekly will get the combo in the bullish direction, then look for the short-term buys. That's the only place to enjoy in such pairs, short-term opportunities, or for those who are more conservative, simply ignore and wait for better setups. Very simple. Pound versus the Australian. According to the weekly, we have this triple ascending cycle, which can still take us towards the 50%. This is kind of the idea here. Pretty tricky in terms of dropping it correctly in the cycles. However, as long as the last high holds, we can see the pound Aussie turning bearish again. So from my point of view, the direction is bearish as long as this invalidation area holds. There is, however, one problem with that, and this is the last divergence on the weekly is bullish hidden. Divergence is contradiction to the cycles, and that's where I would be looking to combine that with clearer direction. So daily is forming here a possible bearish hidden divergence. So the thing with that would be we require the false breaks, which we got already one here, and we do need to break the low. So if we go below this area, we can then start looking to sell the rallies. So pound Aussie break below the low and the trend line, the last valid trend line between the last big wave corrections would validate the sells. Alternatively, we can still push that higher, which would make it 1, 2, 3 and takes us towards the 161.8 of this cycle, which is around the area of 181 here, also close to clearance area. If we climb to this area, this would be the place to start most likely looking for the sell with the bearish divergence. So for the pound Aussie, the idea is look for the sells. No, it's not ready yet. Meanwhile, short term can still push higher. Pound versus the Kiwi was and remains completely acceptable for both directions, simply because we are stuck inside a range and we are pretty much around the middle. There is nothing clear with the pound Kiwi in terms of cycles, divergences. Both directions are completely in play, acceptable in play, and that's basically what we have there. So that's for the pound. The next one on the list would be the yen, the dollar pairs, dollar versus the yen. So far holding the trend line and the bearish hidden divergence. This is the last divergence available on the weekly chart. Therefore, we are for sells. On a daily chart, we also got this cycle and now into the range. So as long as we are holding it, the idea is sell. So the pair was and remains bearish for us. Dollar versus the Canadian, the pair reached the area of the 134, the clearance area right here. It's time to look for the possible setups for the reversals. In order to do that, we need to drop to lower time frames, get false breaks, get lower lows, and then sell the rallies. The alternative for that is if we get, instead of false breaks, if we get 1, 2, 3, 1, 2 and breakout, then we can discuss about the sells. Meanwhile, rallies with fake breakouts are very, very possible and doable. So dollar CAD is still bullish on the short term unless it completes false breaks with lower lows, and then it turns around. The current momentum on the short term still bullish. For the long term, we would be looking for possible sell-off to start and begin soon. Dollar versus the franc. Here we are. Basically nothing clear on this pair yet. It started unclear from the previous week. I would not be surprised if we are developing here the second leg, 61.8 or the 100 with this divergence before we talk about buys. Meanwhile, short-term pressure after the previous week becomes like this. Triple, double top, bearish divergence. So can definitely, short-term can definitely push it lower. So that's for the dollar versus the franc. For the short term, we are still acceptable for bearish. For the long term, we would be looking for the buys. The way I see that, it's still too early. Pacific pairs, Aussie versus the dollar. Basically no divergences in play on the weekly chart. It's coming, it's forming, it's not there yet here, so nothing we can rely on in terms of the weekly. From the daily chart we have this, which starts to become like a special cycle. One false breaks, no higher highs, but moving average divergence. So we can start talking about possible retraces. On the, basically this is the idea, okay? So one more false break and with the divergence, and we can start talking about the bigger buys. Meanwhile, on the short term, this is what the pair is dealing with, kind of a cycle like that. So very likely we're gonna see some kind of push from here before the next sell takeoff. So Aussie dollar short term retraces to the upside is still a very possible scenario. For the long term, the weekly and the daily still not synchronized for the reversals. It would be for short. So again, short-term rallies are acceptable. Long-term, it still remains for a short plan. Next one is also with the Australian, is the Aussie versus the Kiwi. For this pair, our view was and remain bullish. We are still dealing with the special cycle from the monthly and the range. So every drop, we are after buys. Looking on the weekly chart, we are moving here inside kind of channel, meaning if we can get any drop closer to that, we are after buys. The daily chart gave us already beautiful, daily chart already gave us beautiful pullback on the previous week and a bullish hidden divergence, but the way it is developing right now, look what it's doing. This become a very possible scenario. Triple double, so something like that, and the rally again. Anyway, our plan was and remains bullish with the weekly. So what we require to see is a bullish setup with the daily and the 4-hour chart combination. Right now, the last divergence here on the 4-hour chart is bearish. If that will become a bullish and a daily chart would also be bullish, we are after the buys right there. If not, then we accept a drop slightly lower back to the 161.8, which is right here. It does not change the long-term plan. It just changed the level where we are going to work it with. The rally on the previous week was beautiful, but blocked with this divergence. And it's time to be slightly more careful. Again, our plan was and remains looking for the buys only with daily and 4-hour chart combination. However, the current developments hints a possibility for the 106. We have to keep it in mind in case the drop takes place. Aussie versus the franc. The idea is here also from the long term, looking for the buys. We have this channel, right? So we are looking to go higher. On the lower time frame, the weekly, we are stuck inside this kind of range, and on a daily cycle, basically nothing new. This is what is forming here, right? So this is the short term, still acceptable for the bearish. Once this divergence becomes in play, we switch for the long-term buys. So that's the plan for the Aussie versus the franc. Short term is still bearish, no reversals, no false breaks and higher highs. We do have the false breaks trying to create it, no higher highs nowhere. Therefore the plan is still bearish. Once we get a turnaround from the bottom of the range, as just showed a few minutes ago, this would be our long-term buy area. Aussie versus the yen was and remains bearish for us, unchanged, no divergence completed on the weekly. Just want to remind you, this is why we are bearish here, right, for a long time now. And the pair currently is paying good, so sell rallies was, and so far remains the plan. No false breaks, no retraces, no turnaround signs. Bearish it was, bearish it remains. New Zealandian versus the dollar. The best place for this pair would be if we can get a duplication. This duplication should take us slightly lower, around the area of 0.67, 0.66 here. That would be ideal. Then we can say that we have also kind of identical cycles, right? And from there to make the turnaround. We do have the divergence coming in play on the daily. Starts to show itself. We don't have any kind of confirmation yet from the weekly. And also we don't have the cycle besides the range. So attempt to go to the lower part of the range is still acceptable. For our chart, we don't have false breaks. We don't have 3+2 to the upside. Therefore, short-term rallies acceptable. We are still for longer term bearish. Short-term rallies are acceptable. Long-term still remains sell. New Zealandian versus the Canadian. New Zealandian CAD long-term bearish for us due to the cycle we face from the monthly. This is the range, so we are after sell the rallies. Weekly also has the channel for us, makes it sell the rallies. Daily chart showing the bearish hidden divergence. However, the attempt to break the last low previous week doesn't really give anything yet. This becomes a realistic possibility. Now a range, one more leg toward the area of 0.93 and crush. The pair still remains sell plan for us. Sell the rallies only. Ideally, if we can get new highs, fake breakouts, we are after sells. For this plan, unless you are also for the long-term swing trading and then the attack zone is already good. That's basically all. The Kiwi CAD, our plan was and remains bearish. Now we do need also to pay attention to the regular divergence here. It turns to be a fake convergence, and that could bring its bearish pressure as well. Of course, the alternative is we go again lower lows and then sell the rallies come in play for us. Kiwi versus the yen was and remains bearish for us. On the long term, we are aiming the bottom of this channel right here. On the short term, with the 4-hour chart, possibilities of a pullback. We can face some kind of retraces here. For us, the plan is still sell the rallies. So bearish it is for us. CAD versus the yen, same story like the others. Sell the rallies. That was our view, pretty much reminding the Aussie versus the yen. We got the breakout, we got the bearish hidden divergence confirmation. Bearish plan is no bullish divergence formed and completed on the weekly chart, no bullish divergence formed and completed on the daily chart, no false breaks and turnaround on the 4-hour chart. Therefore, short-term rallies are for sells. CAD versus the franc, appear that we are looking for long-term buys due to the triple cycle from the monthly. On the weekly is coming closer to the channel zone here, and that makes it to be the area where we do need to start to pay attention to. Again, no divergence in place yet for the CAD franc. No false breaks and turnaround. Therefore, short term is still bearish. Once we start to see false breaks and mainly turnaround with the higher highs, that would be our buy area. Meanwhile, short term is still bearish for this pair. That's for the forex view. Commodities. Gold has reached the 1260 we were looking at. 1260, 1240 become the next interesting levels for us. That was the first triple cycle down, double cycle correction, and this is basically the very critical area number one. There is 1240 on the middle here, which refers to different cycle, and of course then 1220, which could be also in play. So what should happen for the gold in order to make the buy attractive? The idea remains the same. False breaks, one or two higher highs with a convergence, and then we are looking after the buys. Meanwhile, short term is still bearish. There are no turnarounds nowhere yet. Same with the silver, which is yet moving inside the channel, can still duplicate this, slightly lower. No rush for us. Short term are acceptable for sales. I'm not going to deal with them personally. I think it's a waste of time. But for long term, I do want to see lows and flies. The plan remains the same. Oil. The previous week reversal show its warning signs, I would say. We were dealing with a triple cycle down, so we accepted double cycle up correction. Now it's a bearish hidden divergence here. So what we require is the break of this trend line. Once it happened, we can start looking to sell the rallies. However, I said it's kind of suspicious. This one shot to the upside is a bit suspicious and might hint for some possibilities for the fact that 100 might be over, and we are going for the next level, which would be the area of the 80 to 90. Very possible. I know it's early to discuss about it yet, especially when the bearish hidden divergence is coming in play on the daily and the 4-hour chart. So the plan for us is yet bearish, but we do require to break this trend line first of all. Once the trend line is broken, sell the rallies becomes relevant. If not, then this is what we need to be careful about. The retraced level of this cycle, the triple cycle. If we break below, above the 61.8, this is where it might become suspicious, and then buy retraces would become in play again. So no rush with the oil yet. Okay, very, very important to remember that and to put it right on the place. Natural gas, our plan not changed, bullish still. We cashed out partial previous week around the zone of 295. We are looking for correction and continuation. So bullish it is for us on the natural gas. And indices, German DAX previous week gave us the okay to go. Our plan was and remains sell the rallies. And the new one joining us on the list is the US Nasdaq, which seems like forming the second false break of the weekly. This is the first divergence, fake convergence. That might be the beginning of something interesting. On the 4-hour chart as well, we are facing two false breaks and convergence. So sell the rallies for the Nasdaq. Our invalidation area is right here. S&P could also become relevant, of course, and in play. The whole thing with the S&P, its pattern. Basically, this is what we are facing. So far, let's put it a bit clearer. This is what we are facing here currently, and there is a good chance we are going back to this area. No divergence against formed and developed, so sell the rallies would still be a good thing to do with the S&P. My two favorites, due to the technical view they provide, would remain the Nasdaq and the German DAX. Where is that? And the FTSE also starts to be interesting, and this is why basically we are facing here another fake breakout, and which is holding for several weeks, right? A fake convergence which came in play, and the beautiful part is here currently that it is developing some kind of triple cycle, which also might hint for a continuation and sell the rallies. Again, for me it's Nasdaq and the DAX. They are the main interesting ones. In terms of stocks, we have our Teva going on. Here we go. Our final destination will be 28 based on this special cycle. So we are aiming the 28 as the final possible destination. 61.8 from the retrace and the 100 duplication from this cycle as well. We cashed out partial already in the past, so it's free to go. And cryptos still kind of without real momentums. We are looking, that was our previous week view, paid a bit, then during the weekend dropped to new lows. Now we require new breakouts for momentum. Still didn't happen, so it's basically on the watch list for Ethereum. Right? We have the aggressive breakout here, but no higher highs yet, right? So no real momentum. For Ripple, we require these breakouts. For the Litecoin as well, bullish with the breakouts. For Neo, with its longer term trend line, and basically we can keep going and going, but it would be the same. Bitcoin Cash, Monero, which is the one of the only ones trying to gain the momentum already. So we do require to see the breakout which happened, and the higher highs would be a good sign for us. So that's all. That's the beginning of the week as we have it. Don't forget, this is summertime, which means volumes could be basically not the same as in other periods of the year. However, the opportunities are real, the opportunities are beautiful, correct, okay, and we should be there to take an advantage when we get them from the market created. Eyes on the indices, all the tariffs drops between the countries make the pressure on the economical financial situation around the globe and puts the pressure here, and the indices now starts to provide some technical interesting setups which it's worth to follow. That's all for now, friends. Once again, sorry for my voice, couldn't be in my best condition, so I hope I covered the opportunities as they are. If anything is not clear, then please don't hesitate to ask in the Telegram groups, and me or any one of the guys will cover and explain. So I'll see you on next days. Once again, sorry for the voice. I wish you a wonderful trading week. Yours, Vlad.